Hash Growth is an effort from MoEngage to create a community of marketing, product, and digital leaders like yours. This is the third panel for the day, and trust me, there's a good excitement for this panel. We have a mix of banks, majorly banks, security, insurance, and well, we have a mix of regions also, India and Middle East. Let me have a quick round of introduction to my panelists, starting with Dhiman Thakkar, Head of Digital Banking with Ujjivan Small Finance Bank. Dhiman comes with a rich 16 years of experience throughout in BFSI with groups like Aditya Birla, HDFC, Bandhan, and now doing some major initiative as Head Digital Banking with Ujjivan. I would like to introduce Ravish Bhatnagar, Senior Vice President and Head of Digital Banking with IndusInd Bank. Again, 16 plus years of rich experience working with likes of Bank of Baroda, ICICI, McKinsey, and now with IndusInd Bank. From Middle East, we have Sandeep Podwal, Head of Marketing, Commercial Bank of Dubai. Now, Sandeep comes with some rich 26 years of experience of more than 2 decades in UAE itself. Like initial 10 years, doing working with marketing agencies, and then 11 years with the United National Bank, and now heading marketing at Commercial Bank of Dubai. We have now coming to non-banking environments, but again, very important verticals. So let me introduce Nand Kishore Purohit, who's the Chief Digital Officer with IIFL. We call him NK, and NK comes with 23 years of experience working with the likes of, besides TCS, I will say HDFC Bank, ICICI Bank, Angel Broking, and majority of his time with HDFC Securities as well. Now we have another flavor of the BFSI, that is insurance. Let me introduce Vaibhav Kumar, who's the Vice President and Head of E-commerce and Digital Marketing with Max Life Insurance. 14 years of experience, and that to more than a decade, almost 12 years in Max Life Insurance. So thank you, all my panelists. Thank you for joining me. I will straight away move to my first question, and let me set some background to this question. Now, as we all see that India is witnessing a major transformation in the way banking is done, in the way financial engagements are done. And I was reading one of the reports as per FIS Space Pulse Survey 2020, 68% of Indians are now using online or mobile banking to conduct their financial transactions, etc. And in a survey, 51% said they will definitely continue this mode itself. There are a lot of such statistics in this report, but the point that I want to drive here is that retail banking, financial services were already going digital before pandemic hit. However, pandemic has changed. It has accelerated the consumer behavior with respect to banking and financial services. So with that, I would like to put forth this question that how has this worked in your environment? This change of consumer behavior, this change of how this acceleration has happened when it comes to pandemic. So I will start with Ravish, you first. Would you like to take this question? Ravish, you're there? No worries. Hey, in that case, Sandeep, can we start this from Middle East region perspective?
Sure. No worries at all. So yeah, you're absolutely right in terms of the pandemic having provided, having sort of worked as a catalyst and as a spur to the whole digital transformation sort of journey. And as has been often quoted, right? More than, what the pandemic has done more than what any CEO or CTO could have done in the last 1 year. And the results are there for everybody to see. Branch visits have reduced, calls to call center have reduced, and the overall digital adoption sort of has increased manyfold. And the good part about this is, people who have adopted this are likely to stick with it and not drop off. These are good behaviors that we are seeing, and this will be the start of sort of getting previously people who are probably not as digitally savvy getting onto the digital bandwagon and hopefully continue. The other big change that we're seeing obviously is the increase in terms of contactless payments. People sort of now using, and because of COVID, using the likes of Apple Pay and Samsung Pay and Google Pay and getting their cards sort of put onto there. So we've seen a significant sort of upswing in all of these. From a Middle East perspective, just to give, I mean, before COVID struck, I mean, there were some banks who were sort of still keen on using the old branch network model and expanding their reach and making sure that there were more branches and more access points. We were not amongst those. We were already sort of making sure that we were optimizing that. But I mean, I think thanks to post-COVID, I mean, everybody's now realized that that's not the way to go. I mean, you need to be looking at providing access, but not necessarily through a full physical branch, because I mean, the costs associated with that are fairly expensive, and the footfall is not necessarily coming in that way. So, I mean, providing digital kiosks, for example, or obviously providing the logical thing is to provide mobile and digital channels where customers can actually get anything and everything done at their convenience is actually is working out better. So it actually, it's a double whammy. You're reducing your costs, and you're providing sort of 24/7 convenience to your customers. So all in all, I think it's a win-win for organizations and for customers.
Great. Thanks, Sandeep. Thanks for that. You said reducing the cost and increasing your opportunity. Amazing. Hey, Ravish, my question was first targeted at you. So can I go ahead with this question with you?
Yeah. Can you hear me now?
Absolutely fine.
Okay. Perfect. Yes. So Sanjay, you'll have to repeat the question because I think my network was, there was some problem, a glitch.
No worries, Ravish. I was just setting the background about the way digitals, a lot of financial companies, any which ways were going the digital path even before pandemic. However, pandemic has kind of forced people to, change their guards and, accelerated the consumer behavior with respect to banking and financial services.
Yeah.
So wanted to have your take on that.
Sure. See, I think let me break this question down into maybe three parts, right? One is, the sourcing part of it, because, sourcing and getting customers is one important, specific activity for all institutions, right? Ensuring that they have more customers in their kitty, right? Number two is once you have the customers, then it's the engagement, right? So that's the second bit that is there. And the third bit is ensuring that you retain the customers, ensure that the customers are not moving out because they're not satisfied, ensuring that you provide the right level of satisfaction, make them loyal to you and make them stick to you, right? So if I break that down into three parts, I think what the pandemic has done is actually turbocharge the first two parts very, very clearly, right? The third one actually was fairly digital at least people were using, remote ways to ensure that you build that loyalty, and you were anyways, the way to go was always digital. It was always ensuring that that's how you were able to ensure that people are retained, they build that stickiness, loyalty with you. But what the pandemic has suddenly done is actually now people are not okay with a 30 to 40 or 50% of sourcing. If it was digital earlier, people are not okay with that, right? You are looking at a 90+ percentage because one, you can provide extremely seamless experience to the customers, make them, you can be completely transparent with them over there. A lot of times they have always had this desire that, some of the things were not explained to me in the branches, right? Or on the phone. So now on the entire onboarding journey, you can be complete, you can actually lay that entire land, make them, choose them, give them, you can, if somebody has to choose a kind of card or kind of offers, now you have the power to actually make your own card online, right? That kind of a privilege also exists. So the sourcing, which was maybe people were okay with the 30 to 40% earlier, now it has completely turbocharged to, levels of greater than 80 or 90%, right? Engagement, which is the other thing that the pandemic has turbocharged, is also completely changed, right? People were earlier doing 40 to 50% of their requests, for example, on the mobile or net, etc. By the way, that number is automatically, the pandemic shifted it to around 70 odd percent, 75%. Wow. On a steady state, right? And I'm talking about 1 year from the lockdown. Today is the lockdown's anniversary. Actually, tomorrow is the lockdown's actual anniversary. But yeah, so that number 75% is actually going steady, and we can easily target like a 90% sort of an engagement, ensuring that all customer requests are solved for. So at least in my opinion, pandemic has completely turbocharged the sourcing and the engagement part. I think loyalty was already there to a certain extent. It's just that now people have realized that there are way more means to ensure that customers stick to your particular brand specifically.
Awesome, awesome. Thanks, Ravish. You really defined that very nicely into sourcing and engagement and getting customers and the statistics that you shared. Thanks a lot. So while Sandeep is fortunate to be from a region where the mobile penetration is very high and 90% mobile banking is there, Ravish, you are definitely leading one of the top banks. Let's come to a situation where Dhimant has really tackled these kind of situation coming from a microfinance bank, institute converting into a bank, its own challenges of the tier 2, tier 3, tier 1 city customers. How has Dhimant taken to this particular task, which I specifically mentioned in my question number one, that the consumer behavior with respect to banking and financial have suddenly changed or accelerated post the pandemic? Dhimant, over to you.
Thank you, Sanjay. First of all, thank you so much for having me here. Um, well, I recall a meme which was circulated not more than 10 months back, which basically started with a question that who is responsible for the digital transformation in your organization? Is it your chief digital officer? Is it your chief technology officer? Or is it COVID-19?
Yeah,
And
see.
the person was actually doing a tick mark on COVID-19. So that's what essentially COVID-19 has done to all organizations and BFSI specifically, because it is one of the important sectors and a necessity sector as we call it. I come from a small finance bank. Majority of our customers are micro banking customers who take small ticket loans from us. Um, I would like to talk about three aspects of COVID-19, how we tackled it. While onboarding journeys is something which a lot of the two panelists also mentioned, I would not like to touch upon that because we did pretty much the same thing. But the other part that affected was the overall customer service experience. We are a high touch model where our customer relationship officer meets the customer on a monthly basis. It's a physical connection, right? That had to be converted into a digital form. At the same time, a lot of customers started calling our contact center with regards to the loan moratorium, and so on and so forth.
Right.
Uh, COVID also prevented a lot of those employees from reaching the contact center, right?
Got
So
it.
we actually had to overnight think about a decentralized contact center or a cloud-based contact center. So that was, the customer service aspect, which we had to rethink. The other aspect which we had to totally rethink was the overall collections that we do with the customer, and this is where digitization really helped, and especially in the micro banking sector. Digital collections from retail customers like that was virtually unheard of prior to this, right? So what we did effectively is we partnered with some payment banks, we partnered with some pan India BC players, where overnight we could ramp up our entire collections infrastructure to about 1.5 million touch points. Customers then were not they did not have to come to a center meet to necessarily make their payment. They just had to walk 500 meters to a collection point, which was a payment bank or a BC outlet, and make their payment and credit that payment to the bank account. Um, we actually saw about 40% digital collections at its peak, and it has more or less now stabilized between 15 to 20%. That itself is a huge achievement, and it has actually resulted in a lot of cost savings for us. The third aspect is the internal processes. While COVID also prevented a lot of employees to come to offices, while the connectivity was taken care of via VPN, but obviously it had its own challenges, right? So we also focused on creating an entire robotic process automation roadmap and implementing that roadmap. So we identified about 150 processes within the organization which could be automated, and we are now systematically moving towards automating each and every process so that it is no longer people dependent, but it is a system driven process, starting with operations but touching each and every vertical of the bank. So these are the three things how we actually reshape the entire bank in the COVID scenario.
Thank you so much. Absolutely a different perspective to the whole engagement, where you spoke about collections and the true challenges of your remote locations and people who are habitual to meet face to face with the customer relation officer. I will come in the same question last with the NK. First, I will go to Vaibhav on the same question. But even before I go to Vaibhav, Vaibhav, I was just reading some reports and which like said that 50% consumers now prefer digital channels in India when it comes to insurance also. And and to accommodate these kind of customer patterns, or I'll say the new normal post-COVID world, insurance companies have been relying on a lot of digital channels to acquire, onboard, and service customers for a while now. I'm sure it's 10 to 12 months that you have experienced this. So, how would you like to comment on my first question of how has pandemic accelerated or changed the consumer behavior when it comes to your kind of industry of life insurance?
Thank you, Sanjay. A very good afternoon to all the panelists and the audience. Yes, Sanjay, actually, insurance vertical as such, can be broadly bifurcated into transaction selling, which is morely really motor, followed by health, and then life. And if you look at the trajectory in terms of friction and value, right, you see that life has high value and high friction, and something like motor will have low value and low friction, right? And when I say value, I mean the perceptive value for a consumer, impact value for a consumer, and maybe the earning potential for a distributor. Okay, so you look at that equation, you find that out. Now, Sanjay, interestingly, in our category, the consumer responded faster than the insurers, actually, especially on the demand side. So the moment the pandemic hit and, most of the organizations, industries were running for cover, I mean, guess what? Our consumers were on Google and Facebook searching for buying life insurance. Right out there, the term insurance query, something like best term insurance or term insurance plan, the basic format of life insurance, right? That used to grow at about 6 to 7%. For, last 24 months, we were seeing that growth in search queries was about 5 to 6%. And, that's a interesting stimuli for consumer demand, right? And suddenly in the first 4 months of this financial year, since lockdown, we saw 80% growth in consumer search for our category. Now that was unheard of. I mean, and this was unique to India, by the way. Our friends in Hong Kong, Vietnam, China, they were not experiencing, they had the same lockdown, the same trouble. But guess what? We realized the consumers in India immediately think of their families the moment they see a pandemic. Maybe that's not true for some of our friendly countries out there. And we saw a lot of customers coming in, the demand going up significantly for the first 3-4 months. It has settled down now. I mean, the best, indicator, Sanjay, from a consumer perspective is that, in a year like this, when GDP has really struggled, industries are still trying to come back to the new normal. The private life insurance, and this is large size, private life insurance will actually, deliver a single digit small growth in this financial year. Imagine a year like this, you'll have growth. And the most encouraging part, Sanjay, is that the premium growth might be small single digit. The sum assured that we sold this year or the life cover that we sold this year will actually have a significantly larger growth than the premium growth this year. So average life cover sold per policy in the industry has actually gone up by 18% this year.
Oh, huge.
The consumer responded definitely. I think for the first 3-4 months, it's now settled and we are now coming back to normal growth rates. But honestly, if you ask me, the journey was there. I think most of the top 5 or 6 life insurers were investing heavily on the B2C side, right, for some time. And I think the ones who had invested well, clearly, got to get a lot of dividends this year. And I mean, the best example is that, for Max Life specifically, our e-commerce or direct online business is expected to post a growth in excess of 60%. And that's on a decent base. And, approximately 17% of Max Life customers, and this is a reasonably large size retail life insurance company with, we write over 6.5 lakh policies this year. 17% of our customers are actually walking through the digital door now, direct to the company, which is a whooping number, unheard of even in Asian markets, some of these Asian markets. So clearly, the investments were there, but the dividends started to get on this year. I think in terms of acceleration, the specific question you had, I can tell you, I think some of the organic digital efforts, especially on the enabling the phygital world, as we call it, definitely got accentuated. I think 3 parts to it. the acquisition front, I think the efforts were always on, but this whole focus on a mobile first journey for the seller and the consumer, and then deploying integration and user experience. I mean, I never recall, a user experience conversation in a B2B journey. I don't recall it actually before this year. Guess what? This year, there was a large amount of time being spent on a user experience discussion for a B2B journey because we knew we had no choice, right? There is no assistant that an advisor will have in physical presence, right? They might not be coming to office. So it has to be intuitive for the advisor or the agent to actually sell to the prospect. So, this came into focus, which I loved actually. I think it was a great one. I mean, once again, the physical meetings were now at a premium. You have to understand, Sanjay. This distributor meeting customer is a premium now. It's not easy, right? It's not easy that you just walk into someone's house. So making that moment of truth extremely impactful becomes critical, right? For any organization. Now we had to really rack our brains to ensure all kind of third-party integrations and all kind of checks are built in our journeys so that the first time right rates are in excess of 70%. Because remember, every rework means going back to the customer, and in these times, going back was a very, very expensive proposition. Very expensive proposition. So I think that on that side, I saw a lot of changes. I think across the category, both life insurance, and a larger banking system. Onboarding front, I think a clear acceleration of investments. I think this frictionless has taken significant precedence. And I mean, for our category, the ability to write large sum assured values with zero documentation is actually now a core differentiator. Who can crack it actually have an advantage. And this was not true about 2 years back. I mean, document hai, mil jayega was the way things were, and that's changed now. So I mean, I'm happy to share that for Max Life today, for example, in the B2C ecosystem, 7 out of 10 customers that we onboard, we do not ask for a single document. We have an integration with CKYCs, bureaus, with Aadhaar, and we make sure that there is no single document required for a customer to buy a 1 crore cover. And I think the digital servicing front, I think digital servicing was always there. I think it became more of a lack of supply constraint there, and this multi-channel digital servicing through conversational bot, WhatsApp definitely took over. I mean, there's a 65% digital penetration we now have, and close to 80% digital adoption. I mean, it's funny how many customers, download their policy packs and premium receipts on our WhatsApp for business account. I mean, so that was always there. I think it just got accelerated thanks to the situation, then more our efforts in this case. So really, it's been very interesting times, Sanjay, on the life insurance front.
It reflects in your passion, the way you were explaining all the percentages of sum assured averages going up and 80% surge in search terms and things like that. And now to the most one of the very interesting verticals which NK is representing. And I'm like NK, the Bloomberg report which we were discussing last time, where it says India mobile trading has overtook internet-based trading, and where when it comes to the cash market, and this is as of October 2020, and mobile share is now 23.4%. Which is like second biggest trading contributor after co-location. I'm like, wow, what a good time. And I'm sure more consumers want to start opening a demat account, start trading, etc. Your views on this acceleration, this change of behavior, NK? NK, you're on mute. NK, you're on mute.
Yeah, thanks Sanjay, and thank you for inviting me. Ours is a different industry, and among very few industries which has benefited a lot from pandemic, primarily in terms of scale. Okay, we were always a digital native industry, both in terms of acquisition of customers and servicing of the customers, as far as our retail part is goes. So at IFL, we have retail as well as private wealth. I'll explain the change in customer behavior in both. Sure. As far as retail is concerned, pandemic helped us in further transforming the organization. So what we have done is we started with the sales transformation, wherein we made onboarding simplistic. Okay, pandemic helped us to test scale on our onboarding journeys. So what all we were able to, and it is as an industry, it applies for every player. So what all we were opening accounts or onboarding customers as an industry in a year. In pandemic, there have been months wherein we onboarded customers as an industry equivalent to a year. So this year we have onboarded more than 1 crore of customer as an industry. This is because more and more people are at home, they are getting time, market are moving, and the entire digital ecosystem which all players in the industry has created is helping customers to take investment decisions. So when somebody thinks about future, he thinks about A, insurance, B, investments. So yes, investments as an industry has grown phenomenally. Our growth rates have been in multiple of hundreds across industry. We were lagging at, or we were driving at 70% of customers transacting digitally, giving us around 60-65% of revenues digitally pre-COVID areas. And those 20-30% were those customers who never wanted to move to digital. Okay. They were very happy with human interaction. They had that inertia moving to digital. When we used to talk to them, they had those trust factors of moving to digital. What has happened in pandemic is that these customers have moved to digital. Today, we have 96% of customers transacting digitally, delivering more than 90% of revenues digitally.
Wow.
This has in turn forced us to transform the entire organization digitally, move more forward from acquisition and servicing to the entire operation and customer servicing digitally.
Got it.
We have a huge B2B business also. So that was very human-centric business. So the COVID has helped us to transform that business digitally. It has also helped partners who are our partners who acquire customers for us, getting a belief that they can also acquire customers digitally. They don't need a human interactions to acquire customers physically. And the third and the most important business which we have and which we are market leaders is in terms of private wealth. So in private wealth, where we deal with high net worth individuals or super high net worth individuals, we always had a mindset that if I have to acquire a new high net worth individual customer or service him, I need to seek meeting with him because there is a huge money involved. Okay.
Yeah, absolutely.
There, the entire acquisition and servicing has moved digitally. Even the sensitive things like portfolio review, allocation, and everything has moved digitally. We have also gone ahead and created solutions wherein we co-create our portfolios between wealth managers and customers. So be it acquisition, be it servicing, two other things at a very macro level which has changed in our industry is the entire KRA and goal sheet of the organization has changed. Because we have seen scales, we have been able to believe something which we have achieved in last 1 year. So we think that this is what we have done. Next year, we can do another 20-25% more than that. Amazing. And the financialization of savings has also occurred. So it is in a Paytm movement for us or a DMall movement for investment industry where we have seen lot of new customers joining the bandwagon. So 70% of the new customers whom we have onboarded across industry, I'm talking, are first-time investors.
Got it.
And these are digital native customers.
Got it. Got it. Interesting. Very interesting, NK. All the percentages that you mentioned and even B2B moving to digital, private wealth moving to digital. And somehow I think this point is resonating with everyone. I mean, like Ravish mentioned this, Dimant mentioned this about collection officers, Vaibhav mentioned this about, how, where the final agents has to go to a customer and how, that has kind of become very, it's a premium service as such. Sandeep mentioned about, branchless service and things like that. Great, great. Let me move to my next question. Now, this is more or less around, well, you all have answered, but if you have some more inputs around this, it will be great. And this is more towards where, the whole crux of the, or the need of the hour is about providing fast, accurate, and, quality experience, be it banking, be it insurance, be it securities. And this has been the topmost concern, as I said, whether it's banks or these kind of organization. And government is also, promoting a lot of digital first things, be it UPI, be it BEAM, etc. allowing trading on mobile, contactless or non-signature based insurance and whatnot. So the point is, so banks, insurance, securities that has been doing marketing, engagement the traditional way, and now we spoke about the customers, right? Like how customers have changed, how behavior has changed. The point is, and while you all have most of you all have answered, but if you all have that additional inputs, how that you all have changed or adopted, or would you like to suggest, like what were those steps that you took? What was the first step that you all took? What was the second step that you all took? And proceeded addressing this. So NK, I'd like to start with you itself on the same question.
So what we did is that from the marketing perspective or customer experience perspective, Sanjay, we moved from campaign personalization to product personalization. Okay. So there was a time when you used to hyper personalize or personalize campaigns for a certain set of customers. Now my product has to have an engagement module inbuilt into it where my product can personalize to the customer. And that's where, if I look at internally, we took a bold decision among the first in the industry to move cloud native. If I am on an on-prem infrastructure and I have to personalize my experience with the customers, I only have the wrapper campaigns through which I can personalize. Okay. But in our industry, every data of the customer resides on my product and the platform. So can I move from campaign personalization to product personalization is one area which we have worked upon and we have been very successful. Our mobile app daily login through this product personalization has increased 2.5 times. Our average revenue per transaction per customer on the mobile app has increased by 28%. Number of customers transacting on mobile versus number of customers logging into the mobile has increased by 57%, which means that earlier the people were logging in, but they were not transacting. What we have done is through product personalization, we have been able to make login customers transacted by more than 57%. We have increased that, which has resulted in increase in revenue, which has further resulted in aligning our entire ecosystem from a customer-centric and usability perspective. Right from, so as of today, we have moved from a human-centric organization to a product and a platform-centric organization, right from lead till customer service. We want to provide a uniform and a wow experience. And this is something which we deliberate normally, Sanjay, is that people think that account opening experience has to be wow. We think that if by any chance the customer has to depart from us, how can I make that process also wow from him so that next time if he thinks about investing, he'll come back to us.
Absolutely.
So that is where we have worked upon, and this is a work in progress. We should see results within a year or so.
Interesting. Thank you so much, NK. Hey, Dhimant, while you absolutely explained this part, what were your, how you worked over collections and, those other aspects of bringing digitization. But if you have to define, moving from the traditional way of marketing and engagement to bringing that change and, what were the first steps that you took, if you want to give those examples and, and the step next and the way ahead, if you would like to explain that, Dhimant.
Right, Sanjay. So, what is traditional, in fact? What is a traditional way of engagement in banking services? Even today, my father likes to visit a bank branch. And when I ask him, why do you want to visit? His only answer is because they know me. Right? So, if we need to scale that further and bring in technology, I think the personalization or the hyper personalization, which can be brought in through the right engagement models and the right tools, is something which is very important for organizations to move forward in the new normal. And that is actually the definition of the new normal, to be precise, right? Some of the things that we did in, in the kind of customer space that we operate in, we are a mass market bank, right? We focus on serving the unserved and the underserved population. We had to focus on catering to our existing customer base, also acquire a new set of customers who also belong to the same segment. Some of the things that we did, yes, we automated a lot of workflows and all, as everybody has already spoken about. But what we also did is, use video as a medium to reach out to our customers. As a bank, our security standards are pretty stringent. We just cannot, adopt any free, video service which is available. So we actually procured a solution with which now we are able to connect with all our customers over video, be it a HNI individual, be it a regular individual who's taken a small ticket size loan from us. We also are using video to interact with our customers before we give them a loan. So, as part of our entire process, when we disburse a personal loan, any retail loan, or even a SME loan, it is a industry practice that you need to meet and greet the customer and verify certain things. If it's a housing loan, you need to verify the property. We have actually leveraged video and taken an on-prem solution wherein we are able to do all this digitally using video. So that is something that has really helped us a lot. With regards to personalization, we are taking a lot of steps around it. We are yet to reach to a stage of hyper personalization. But again, taking that example of collections, what we were able to really achieve there is, when we opened up those 1.5 million outlets to all our customers, there was also a challenge where we had to reach out to the customers and tell them that, okay, these are the various, 2, 3 collection points closest to you. So we went a level ahead. We actually mapped the latitude, longitude of all the collection points. We also mapped the lat long of our customers because we had their addresses, and we were able to ring fence, in a zone of 300 meter radius, which is the nearest collection point. So for each and every customer, we were able to tell that person that, hey, these are the 2 collection points in your 300-meter radius. You don't need to travel very far. Right? So these are kind of some of the examples, I would say, how we continued being traditional, which is we continued to remain high touch, but using tech to move towards high touch and high tech combination, as I would call it.
Sure, sure. That's really great. Thank you so much, Dhiman, for that. Vaibhav, moving over to you, and I did read these articles also where now IRDA has said that non-signatory, as you were saying, contactless. So where IRDA said that insurance and policy holders are able to sell online, just based on OTP consent and all. I'm sure you would have, and you also explained a lot of new things that you all did. So, but moving from again back to the traditional to the new ways, what were those examples of first step, second step that you all took to match these expectations?
Sure, Sanjay. So see, the first is the really step one always is the mindset change,
Right.
that because it's like, a Formula One race going on and then there is a bend, right? What
Yeah.
do you do on that bend is pretty much defines the race, right? For all Formula One races. So really is how do you maneuver the bend is the most critical part. And in this case, really the whole mindset change, getting the entire organization getting together to create a home to home selling or a heart to heart selling, as we call it now, right? Model from the physical intermediation model that we are used to, right? And what it meant was, some really sharp cross-functional thinking. So we had a road opening party created, just the way it happens in these border areas where you have a road opening party that goes out and clears out the road before the real army arrives, right? The real artillery arrives. So we had road opening party whose job was to go out there and figure out what needs to change in the platform, integration, underwriting, onboarding process, the current friction that we have in our process, and how do we digitize, automate that. The distribution teams in parallel, started to operate into this entire digital way of governance, right? That was step one, because suddenly from a physical office, you have to operate out of a digital office. I think the transition was beautiful, incredible, and a huge learning at an organization level for the next 5 to 10 years, actually. It's a long-term learning that gets embedded, right, at a corporate level.
Right.
So I think that was a big win. The 2 or 3 critical elements to this is first, making sure that your journeys are right. Journeys talk to the customer and the distributor, and then the entire backend systems, right? They reciprocate to the road opening party asks, right? How quickly at what agility speed, we can do those deployments. So there was a lot of effort there. Then the whole solicitation process, Sanjay, and life insurance is about that moment of truth when the advisor or the banker will look you into your eye and give you a product proposition and then try and take a check from you, right? And that solicitation process is mission critical in a category like ours, right? Because we are a push category, not an organic. Wake up in the morning and say, I'm going to buy life insurance today, right? So we have a lot of people who go out there and make those representations to the consumers. So that entire solicitation process, how to digitize that, right? Starting from our quotation creation to illustration generation, some part was already there, but now everyone had to adopt to it. So there was a huge amount of investment done in training to make sure before we sell our first digital policy, we go about training our 60,000 odd agents, 12,000 odd branch folks across, 2 large banks like Axis and Yes Bank. And really there is where the real investment and the real execution lied. Because, creating a slide on how it worked is easy, but I can tell you execution was a big challenge. And I think it's really kudos to the team that executed it in a seamless manner, that it came out really well. On the B2C front, Sanjay, I can honestly tell you, we were living this life for the last 7 years, right? So really there wasn't a big change except our telesales engine, right? Our large call center, both solicitation and servicing had to be quickly migrated. So we had to quickly move to a cloud-based dialer. We had to quickly base to a cloud-based CRM. We had to ensure that, the voice quality is controlled, because remember, just like you and me, our telecalling agents don't have office space inside their house to call their customers, right?
Right.
Space available. So how do you manage this entire piece without giving up on information security, making sure all protocols are followed, because our category is a very heavily regulated industry, right? So we cannot compromise on any kind of information security protocols. So that has to be really tight. We faltered in sometimes, but we picked ourselves up. The good part is that, because we knew that the consumer demand is there. See what happens when the demand for your product is there, somehow everything falls into place. I can assure you.
Right.
The problem usually is when the demand is not there and then you have to invest in capex. Am I right, Nand?
Very true.
So once you have a demand, Sanjay, I've realized all things fall into place, including capex and opex that comes along. So,
Cloud approval also happens.
Absolutely.
No, but still, I mean, like the angle that you brought in, while we speaking of digital initiatives and whatnot, but you said like, your OEM channel, the banker channel, training to the banker channels and training to the agency channels of 60,000. Yeah, definitely. Yeah. I've heard this from other insurance companies also, how, they enabled their agents to be able to conduct those, video level presentations, etc. Makes it easier to monitor also from your perspective of, what's happening and all.
Absolutely.
Great. Hey, Sandeep, so same question to you. Like, how is it in the Middle East that, you all have been taking this steps, your first step, next steps, to address the sudden change of consumer behaviors and things like that, Sandeep?
So I think, most of the panelists have actually touched on all the key sort of aspects, but I would only, for anybody sort of venturing into this, I would say, rather than get obsessed with saying digitization or digital transformation, and again, it's sort of interchangeably used, although there is a vast difference between the two. And again, digital transformation is the way to go. Digitization is just existing processes being just sort of now enabled digitally, whereas digital transformation is rethinking the entire process itself, and throwing out the entire playbook and then actually starting afresh. But to me, actually, the start point is always the customer. I mean, you need to keep the customer at the heart of it, and then figure out what is that the customer wants. And just a small framework that I sort of like, that I've been looking at is a framework that has been done by a professor called Professor David Rogers from the Columbia Business School, and it's covered in one of his books called, I think, The Consumer Network. And he talks about 5 key aspects when it comes to digital transformation. And he says those are, he calls it AECCC. So it starts with access, and it stands for access, wherein making sure that you are able to digitally provide access to your customers 24/7. And again, for banks, traditionally branches used to be the only sort of source of somebody needing to walk in, like Dhimat was mentioning. If the branch is closed at 3 o'clock, his father cannot go into the branch, and like moving away from obviously there to 24/7 through the mobile. So right. How do you actually enable that? The second is engagement. How do you actually make sure that you are able to engage with your customers 24/7, just beyond just providing a service? The third is content, and making sure that you provide content that is relevant, and therefore it is something that keeps the customer loyal to you. Right. The last bit was in terms of customization. And again, that is an important aspect. We all spoke about personalization and hyper-personalization. The world's moving to where it is marketing to one, where how can I get a product that is different from the product that's served to you, and a product that's served different to this thing. And the last critical aspect, which we still haven't probably gone on to, is collaboration. The world's moving to a stage where it's not about me as an organization or as a producer of goods giving it to customers. It's more me collaborating and co-creating with the customer to actually get a solution. And that, I think, we still some distance away from. There are some industries that have got to that, but I think within banking and within some of these other sectors, we still have an opportunity where we can actually partner with our customers rather than partnering with competition or fintechs. And again, that's a separate angle. But so I see, I like this AECCC as a good framework for you to look at. If you are a new organization trying to get into this digital transformation journey, keep this in mind and see how you can keep the customer at the center of it, and how you can actually address these 5 aspects. You would probably be on the right journey.
Great. Thanks for that point, Sandeep. And the moment you said collaboration, I thought Dhimant had given a great point on that, how they worked with various payment agencies to create the 1.5 million points, so going beyond the customer. So Ravish, a lot of challenging or initiatives. When you are among the top 5, top 6 banks, then you really have to live up to it. So I would like to hear from you on to meet this sudden consumer change or behavior. What is it that you have done differently, or those steps that you have taken?
Yeah. So I think I wouldn't say that we have just taken all the steps. I think it's a journey, and I think COVID has accelerated that journey. That's something that we discussed in the previous question. I think what we are doing differently now is specifically, we are following a very, very structured approach. To start with, by the way, the differentiated experiences that we want to provide to our customers, and hence the use cases. So we in fact identified a bunch of use cases, differentiated experiences that we want to provide. And then we started building for the digital natives. So basically the entire design was for the digital natives. Sure. Because this was a focus segment that we had identified that we want to, specifically cater to. And then we thought of at least finalizing our technology and the marketing stack that we'll require to target, these digital natives once we have acquired them, or at least during the acquisition process, right? So that's a 3-step process that we are following. We have done some parts of it in bits and pieces over the last 1 year, but now we are actually taking the entire thing in a very different manner, thinking of a very different proposition for a different, specific target segments that we have identified from at least, banking point of view. I think that's the 3-step process. Now, what at least the main thing that, and Sanjay, very relevant to what we are discussing, at least the topic, is even after doing this, right, what will remain, by the way? So there are 3 things that might become parity over a period of time from one organization to another is your channel. So omni-channel strategy that you want to apply, the other bank or financial institution is going to at some point maybe copy that. Technology stack, right? That also will become parity over a period of time. And the customer journeys, right? Because the UI UX can only be a differentiator for a specific period of time, right? So these three things is something that anyways, while we are doing quite a lot and we have done some, but this will become a parity. Now, what will remain is basically the entire personalization experience through the use of data and analytics, because that is going to define how well a brand is connecting with the customers, and how well they are able to engage and retain the customers specifically. So I think while we are doing what we are doing, I think this is what is going to remain and differentiate one brand that would be my thought.
No, definitely. That's a very important point. And in fact, your point of how we are branding and communicating, how we are using data and analytics to do this is important, which kind of leads to my next question with and I'll put this question just to two or three if you all are okay, and then the last question to the remaining two esteemed panelists. So maybe I'll start with Dhiman. So, from what Ravish said, the data analytics and how do I, do my, branding communication, etc., which means that, from the wide array of your customers, of course, not HNIs in your case, but, various kind of household incomes or SMEs and business and things like that. The important thing when you're targeting such a broad base of consumers is how do you segment them, because your emphasis of going digital, you want them to download your app, and while making them download an app, what are the challenges that you're facing when you're segmenting this consumer to have that accurate conversation, communication, etc. So what are the factors you consider while segmenting, or or the steps, or how are you addressing this challenge, Dhiman?
Well, COVID-19, I would say, is equivalent to demonetization 2.0 in terms of driving internet and mobile banking download and usage, right? Uh, while in the digital industry, demonetization 1.0 was actually seen as a blessing. This is 2.0 of it, right? Driving digital has always been the focus, and in Ujjivan Bank as well. Um, the kind of customer base that we have primarily, they have feature phones mostly, but a lot of them have basic smartphones and some advanced second-hand smartphones as well. So that is a trend that we are seeing. In fact, many of the micro loans that are taken by customers are actually to procure a smartphone, right? Because it actually is seen as changing their world, whether it's an employee from one of those delivery services or a food delivery service, so on and so forth, right? So it actually helps them, upskill and take part in a profession and get some structured income rather than doing something on their own. So we've seen a lot of adoption with regards to these devices, which are prerequisite for accessing digital banking services. Apart from that, from an overall segmentation point of view, yes, we do the data analytics that typically everybody does in terms of age, the age and other related demographics, the kind of device data and device information that we gather from our customers. So those are anyways something which happens. What we also do additionally is, we have this concept of a digi buddy. In the segment that we operate in, it requires, and even when in 2014, when I actually started in the mobile and internet banking space, where the penetration of smartphones and all was not as much, there's a lot of training which is, or that initial adoption handholding which is required to be done by the bank with the customer, right? And that is always a personal interaction of sorts. So we have a concept of DigiBuddy here in Ujjivan, where there's a designated person within each and every branch whose sole job is to ensure that he or she talks to the customers who come to collect the funds as part of their loan disbursals, and get them to download the application, get them hooked on to one or two transactions which they frequently do. Typically, if the time is available, then add a biller and so on and so forth. These are the kind of repetitive activities that anyways a person does, right? What we are also doing now is with the marketing automation tool that we have, we are actually doing a real-time customer segmentation as we go along, where people who have not paid digitally, but they would like to pay digitally, or they qualify in that particular segment, we send them a lot of notifications and messages and convert them from a physical to a digital. If somebody has made their EMI payments digitally, and in the last couple of months they have dropped off, we actually are reaching out to them and getting them onboarded again. So those are the kind of activities that we are doing to ensure that the digitization is sustainable, and slowly we grow forward on that.
Great. Thank you so much, Dhiman. Hey, NK, I'm going to ask my next question to you, and then, I'll move from there onwards to takeaways, because we are really like kind of almost done with the time. So, NK, now you said 1 crore customers in 1 year. I'm sure your process should have been very seamless to address such a kind of surge, when it comes to KYC and, all those high barrier entries. So the any tips from your side on how you have handled this? What has been your learnings while you were about to create this onboarding experience for your digital channels?
NK, you are mute.
So when we started our digital onboarding 2-3 years back, Sanjay, we were just online onboarding. So we created the web form version of the forms which we were getting the customers filled. We have our compliance team with all the ifs and buts that we need to take from the customers, IPV, etc., etc., etc. And it was an age-old process. What we over a period of time has learned is that we have collaborated. We have collaborated with lot of fintechs to ensure that the entire onboarding. So my first journey was made in-house, developed in-house. Today, my journey is entire collaboration with lot of AI players, with a lot of fintechs, wherein end to end, it is completely digital with almost 8 to 10 best-in-class players collaborating to make the customer experience seamless. Second, it is without any verification. So my 67% of the customers whom I onboard, the account opening or account activation does not need verification. So we collaborated with agencies, we collaborated with fintech. So what all was required to be done by humans, we are getting it done through AI, as well as collaboration with government agencies like Aadhaar, DigiLocker, NSDL verification, etc., etc. What one good thing which has happened in our industry is that our regulator in last 1 year or so, 1.5 years to be very precise, has itself transformed, be it because of some mishappenings happening in the industry, which were primarily because of human intervention. So our regulator has also forced us to create infrastructures which are end-to-end digital. Amazing. The biggest roadblock in our industry, Sanjay, was the power of attorney. Okay, even if you open a demat or a trading account, you need a power of attorney from the customer to debit his account or to debit his shares from the demat account. That power of attorney or the pool account which brokers were using to transfer shares from customer's account to broker's account led to delays, breakup of the journey, and frauds. Our regulator pitched in and they created infrastructure at the regulatory end, wherein as of today, my entire customer can complete my journey in exactly 3 minutes, 42 seconds and trade in 5 minutes. Amazing. So if he buys a share in 5 minutes, okay, he can sell the very next day. Not even a single paper is needed. Amazing. Very nice. So the technology has helped us, our regulator has helped us, and collaboration with fintechs has helped us in creating that journey. Class example of the last CEO of Sandeep, that is AECC.
Sandeep, before now we are like done with the time. I'll just ask for a quick few second takeaways, and starting with Ravish, because Ravish has to step out. Ravish, if you have to add any quick takeaways for all our audience or fellow panelists out here for us at MoEngage.
Yeah. No, I think just from a takeaway perspective would be, I think given that, this topic is specific to, a very, very specific topic on data and analytics and how do you personalize the entire, growth strategy maybe, right? And which actually turbocharges what you want to do with your customers, right? So I think what I'll just leave, I think three thoughts and maybe, put an envelope of, some thinking on it. So one is, what is, I think three things which are required for this approach, which we started doing, by the way, some 8-9 months back, is making all our, specific, customer communication and, campaigns. When we are making it personalized, we are driven by what we call as personas. You can call it micro segmentation, and hence ensuring that the engagement needs to be micro segmented, right? It can't be one size fits all, and it needs to be driven across channels, right? So it can't be that we are talking about mobile versus, it has to be across channel, right? On WhatsApp as well. So using these three mool mantras, what we have done is ensure that the overall overarching thing is ensuring that we use these three mantras on our D2C communication and interventions that we are doing, ensuring that we use these same three mantras on the tele and the remote channels, because that's where the customer engagement is happening, and ensuring that because some part of the connect, I think Dimant was talking about it, that his dad still feels the need to connect individually with people, and hence the face-to-face interventions which still might be required in a limited manner, but still the branches, right? So ensuring that D2C, tele, remote and branches, or your relationship model, everything, all connects happen using these three themes.
Got
That would be, that's all from my side.
Thank you so much, Ravish. Thank you for your time. Hey, Vaibhav, if you would like to summarize with some takeaways. So Vaibhav and Sandeep, I'll take takeaways from you all, and Dimant and NK. Any questions that come from the audience, I will ask you all to answer that, and then you can summarize your takeaways while answering that. Yeah, Vaibhav, over to you for the takeaways.
Sure, Sanjay. I think on the acquisition side for our category, we're all BFSI brothers here right now.
Yeah.
So on the acquisition side for B2C, I think put the thinking right from end to end, pixel to service delivery to post-service issuance. We are not an e-commerce platform. We do not sell TVs and LCDs. So over-invest in the consumer journey.
Yeah.
OPEX before OPEX is my learning. Because in the digital advertising world for a B2C, OPEX is it evaporates before you even find out. So try and get the journey right before getting heavy OPEX investment. Try and get the engineering right. Very critical for us. The only expectation really the customer has from us is to not screw up things, right?
Yeah.
For a banking product or financial services product. On the B2B front, over investment is a must on the frictionless onboarding piece. The consumers have moved on, and we'll have to move on very quickly. They are not looking to, as Nand clearly pointed out, they do not want to submit a document. They have it, by the way, they have it, but they just don't want to.
Yeah.
Because they've been, privy to Flipkart's, Amazons of the world, are even zero in Nand's category. This is the way life is. How come you're not giving me that life that I'm expecting from everyone else? So the consumers have moved on. We have to quickly move on. We really have no choice. And on the post-servicing side, post-purchase servicing side, try and be where the customers are instead of creating your own platforms is my learning. I mean, you can keep creating the most compelling and smartest bots. Guess what? Nobody uses them here. Finally, it's WhatsApp or business that they end up using and engaging with. So try and be where they are, because uske mobile mein utni jagah hai. You can't get too much of a space. So at least for post-purchase servicing, try and be where they are instead of trying to get them where you are, is the way I would look at it.
Yeah, very true from insurance perspective. But Sandeep, mobile banking app becomes the becomes the platform for you to engage. So, what are your takeaways when it comes to summarizing today's?
I mean, my just sort of a few points in terms of summary would be that don't only look at it as from a front end perspective. Creating a nice, sexy app is probably easy, but you need to think it through and through. I mean, you need to make sure that I mean, if I've got a great app, but then I still have forms to be filled in triplicate, and people, my ops doing something, and my risk doing something else, and my compliance doing something else, then you're sort of defeating the whole purpose. You need to really have a through the line process, and I mean that's where you need to focus on. And I mean, we are getting there. We've got now, like our friends in the US, in India, I mean, our account opening process, our credit card applications, our loans, everything is end-to-end digital. I mean, so like you guys were saying out here as well, all you need is your Emirates ID and a smartphone. Touch wood. I mean, thankfully here, smartphone penetration is amongst the highest in the world. I mean, so I mean, in the UAE, that's not an issue. And literally in under 3 minutes, you can actually open an account, start transacting. You can get a credit card issued with your bureau pulls and everything else done, and actually even get loans disbursed into your account. So that's where the future is. You need to move on and go along. And again, as Vaibhav was saying, customers benchmarks are not necessarily your other competitor brands. It is the Amazons of the world, it is the Facebooks of the world, it is the Googles of the world. Those or the Ubers and the Spotifys of the world. You need to make sure that you benchmark against those. And when, for example, when we did our onboarding process, we were literally looking at banks around the world, and we said, I mean, let's look at your Monzos and Revoluts and N26s of the world and see what's the kind of onboarding process. And our onboarding process matches them. In fact, is better than them. I mean, we are down to only for opening an account. You can open an account in just 10 clicks. And I mean that's where you need to keep sort of driving. And I would say the future is still, I mean, great. It's a great time to be a customer. It's a great time to be a marketer.